Let's wrap up your money for this week on the South African Morning. In June, consumer price inflation, CPI, easing to 5.1% year on year, sparking discussions of a potential rate cut. Wouldn't that be good news? Moderated fuel and food prices thrown in the mix. What exactly does that mean for our economy? Luckily, we have somebody much smarter than me, Reza Hendrickse, portfolio manager at PPS Investments. Reza, good to have you back on eNCA. So I want to talk inflation. It's within that target band range, but still above the midpoint, between 3% odd. What does it tell you about the state of our South African economy, and could we see a rate cut?
Thanks, Gareth. Great to be here. Indeed, it was quite pleasing to see that drop in inflation. It was a very slight reduction, I'd say 0.1%, down to 5.1 from 5.2 the prior month. So we don't really obsess too much about a single data point in inflation. There tends to be quite a lot of noise around that. But I think what is important, as you rightfully say, is that the trend in inflation certainly is lower. Now, we are still above that 4.5% level that we mentioned, and that's where the SARB would like it to be. And that's consistent with many other countries around the world, in fact, where inflation has generally been above target levels. But I think what it means, I think what is encouraging is that firstly, the path, as I mentioned, is lower. And what is also encouraging is when we saw the latest MPC meeting happen, we saw a shift in the mix of the members opting to keep rates on hold compared to those that there were a couple, in fact, that were calling for a cut. So that is encouraging. I think that this trend lower inflation is certainly causing the debate and the discussion to happen around when to cut rates.